Welcome back to Network Spotlight. On today's show, I will be talking to Ryan across the pond. Ryan is the CEO of Thallo and has done a pretty magnificent job early on. He came in and just within a few months has been able to raise $2.5 million. Now, Thallo is a carbon marketplace, and in the traditional world, there are a lot of challenges within the carbon market. So Ryan and his team is utilizing tokenomics as well as blockchain technology to help make it a lot more transparent and a lot more efficient. It was a great conversation. I think you'll enjoy it. Please support the channel, subscribe to the channel, and this way more people can learn about the amazing and talented guests that we have on this show. Enjoy. Hey Ryan, thanks so much for joining me.
Thanks for having me, Mikhail. Great to be
It's
here.
it's a pleasure. I know you've been busy with some personal matters lately, so I appreciate you taking the time.
Yeah, no problem. Yeah, newborn baby. Interesting set of challenges, but new set of challenges, but all good fun. Loving it.
Great to hear. Great to hear. Well, I wanted to bring you on and talk to you a little bit about Thallo,
Sure.
which my understanding is a new experience for you in terms of your endeavors that you've been embarking on. Can you, in a one sentence, can you explain real quick what is Thallo?
Yeah, one sentence is difficult because I know we'll speak for hours about Thallo, but just to keep it to one sentence, I think Thallo is an enabler of refi.
And so that's a very straight to the point. Appreciate that. And I want to dive deeper, of course.
Sure.
First, let's talk about what is Thallo trying to accomplish, and then maybe we can touch on your background and how you got started.
Yeah, absolutely. So uh, at Fellow, our mission is to realign the incentives of of the local Web3 economy initially, but then the global economy as we move forward. Now, these mission statements, I always find quite fluffy. And what we are at Fellow is not fluffy. We're pragmatic. We're kind of mission focused and short term focused as well. So to break that down a little bit more, we we work with carbon credits. So we think carbon credits in the short term is the enabler for refi. We think that if you can align incentives through Web3, and a bunch of us in the team has been working in Web3 since 2013, 2015. So we've got some real OGs in the ecosystem, and what we've all been focused on previously is, I guess you could say, bringing real world assets or RWA and aligning those with innovation and innovative tech in the industry. So, for example, we worked on an institutional stablecoin. We partnered with BlackRock, US Bank, Bank of New York Mellon. But really, when you're talking to tier one banks and trying to sell them an institutional stablecoin, then everything needs to be solid. There needs to be all of the infrastructure in place, including KYC, financial infrastructure, that really gives them comfort and allows them to accept technical innovations. And it's a really hard part of building innovative tech is convincing the traditional markets that this innovative tech is exactly what they need. And we see the same in carbon markets. So carbon markets are largely OTC. I think about 98% of carbon transactions are OTC at the minute, which means that they come with a bunch of manual inputs. So they have to manually KYC each other. They have to find each other. Suppliers have to find buyers in the ecosystem, and there's just a hefty cost of sale to operate within that ecosystem. So if you can use something like Web3, which traditionally is very good at connecting suppliers and buyers and removing intermediaries, then why not do that? And we're doing that in a different way to maybe some other refi players in the ecosystem. They're moving towards decentralization a lot quicker than we intend to, because it's much harder to convince existing market players, existing buyers of carbon credits, to move into that, to move into this new space, to move into this new innovative space, without offering them the comforts that the existing market offers them. So we have to be pragmatic. We have to move in steps, and if that means moving towards decentralization in a year or 2 years, once we've once we've built out that market, once we've made some of those market actors trust us on both the supply and the buy side, then that's what we'll do.
You mentioned that some of the challenges of OTC and exchange and KYC, is that something that with your marketplace is kind of already built in, or how does that work?
Yeah, so that it's important to. I always say that there's two parts to what Thallo's building. So Thallo's building out an infrastructure, an enabler, and a marketplace that is a good example of what can be built on that infrastructure. So I think in order to enable any refi ecosystem to operate to its best potential, we need to aggregate all the suppliers in a single place. So that's really the first part of our process, which is to make it possible, right? To make it possible to build on this infrastructure. So to do that, we need to, like you say, build out KYC standards that exist for any transactions within that piece of infrastructure. We need to aggregate in a hub and spoke model all of the registries, and that could be both on chain. We're working with on chain carbon registries and off chain carbon registries, but into this hub and spoke model. So if we can offer a single API into a liquidity aggregation of all of the carbon credits that exist in the space, then that's how we make it possible to build things on top of that, including the exchange.
And when you talk to traditional, Web2 companies, when you present this idea, what are some of the challenges that they're having in grasping the concept and moving into this new way of doing it?
Yeah, it's interesting. I've a number of I've worked on a number of projects now where we've brought real world assets into Web3. Generally, the biggest problem is that it's Web3, right? There's there's an image problem within Web3 at the moment, especially with FTX and some of the other sagas that have gone on recently. So that's why this level of comfort of operating to the same standards as a Web2 company or higher than that is incredibly important. So it's all about abstracting the front end, or the section of the infrastructure within which they operate. Abstract all of that away from Web3, right? So we're the experts on Web3. We're the guys that are building on it. We're the guys that understand all aspects of building on a blockchain. They don't need to understand any of that. They need to be able to operate in a market using fiat on ramps, for example, that is completely abstracted away from any credit or tokenization, custody, anything like that needs to be abstracted away from them, and just this front end uh, built over the top.
So it sounds like what you're saying is from a user standpoint, it needs to be very user friendly on the front end, nothing
Yeah,
intimidating, but on the back end, you've got all the bells and whistles that you need with blockchain technology to make this thing go.
yeah, exactly. And I think there's a mission statement which anybody building in refi at the moment, in fact, anybody building in Web3 at the moment, our mission is to onboard the next billion users, right? And if we onboard the next billion users, we can integrate in refi into TradFi, and we can align incentives so that every time there's I don't know, a purchase of your hand cream or whatever it might be, that it gets wrapped in carbon credits, it becomes a green product. Then that's the way that we scale this market very quickly. But in order to do that, we can't build products. I've recently seen a lot of carbon credit NFT projects, which is great. That's it's an interesting use case, but when you look at the target audience, when you look at the size of that target audience, it's Web3 users only, and it's a very specific part of Web3 users only. So it almost becomes an echo chamber, and you're building into that echo chamber. I think that's totally the wrong way to look at this. We need to be building outside of that echo chamber, outside of refi, outside of Web3. We just need to be building for the wider ecosystem. So that's the way we win. That's the way we onboard the next billion users. And in order to do that, we've got to abstract those complex parts away from the end user. And we already do that in Web2, right? Web2 users don't understand that when they're using Shopify, it's hooking into a Shopify SDK or whatever. They don't care about any of that. They just care about buying the product. The product makes sense. The product is sold to them. The narrative they understand, and so on and so forth.
You touched a little bit about some of the other players in the space in terms of how they're um, pursuing this initiatives.
Sure.
Are there any other ways that you consider yourself to be different from some of the other players?
Yeah. I think in the space, as I say, the main difference for Thallo is that we're Web2 first. Um, we're we're also There's been a moratorium from Vera. Those that understand refi will know this well. So Toucan, and I love the guys and girls at Toucan. They're absolutely brilliant. They effectively started the refi movement, but they've effectively stopped any sort of bridging for the last 8 or 9 months. They're waiting for Vera to re-enable that tokenization initiative. I think it's important as we move forward, to move the monopoly away from Vera. So as we move the way to move the monopoly away from Vera is to work with some of these more boutique registries, and we've done that with biocarbon. So we built out the first two-way bridge, which enables credits to come on chain and then back off chain. So we don't have this siloed liquidity pool of on-chain credits and then a siloed liquidity pool of off-chain credits as well. They're essentially just the same liquidity pool. So I think we're working in a more pragmatic fashion. We're working towards working with the major registries, so Gold Standard and Vera specifically. But in the meantime, there are things we can learn. We can test these registry APIs. We can test the interest from the users. We can test the front ends. There are a number of things that we can do in the meantime to try and expand the reach of refi.
Ryan, shifting the conversation a little bit,
Sure.
you're the most recent CEO at Thallo. What's that experience been like jumping into the role?
Yeah, so it's really interesting actually. So I've been in a number of founding teams, but generally I've been in founding teams, and somebody else has taken that CEO role, right? So it's an interesting shift that rather than providing the right information to the CEO, explaining why you think this is the right move, you've got to then ingest that information yourself and then explain to the rest of the team why you think this is the right move. And there are some CEOs who operate with this is what we're doing, this is the path. And there are other CEOs who operate and say, everybody must have a say, and we'll go with the majority. I think a good CEO probably sits somewhere in the middle here. Um, if you can't get buy-in from your internal team around parts of your product, you've got no chance of getting buy-in with any externals. So that's a simple rule for me. If I can't explain to my internal team why a product decision makes sense, it doesn't work. It's been interesting moving into that role. I've just had a little baby daughter as well, so it's interesting managing time now. You have to prioritize a lot more, in that lead role, in that CEO role, and you have to prioritize even more when you've got a screaming baby that's calling for your attention at the end of the day.
Yeah, that's a very interesting point. That's something that I'm hoping to accomplish for myself as well. But
All that
I
way.
know this space it moves so fast, it's so busy that juggling that can be a challenge.
Yeah.
Not really sure how I'm gonna do it, but I'll definitely do my best, and maybe I'll have to give you a call and ask for some advice on that.
Absolutely, you'll manage, no problem, no
So,
problem.
how did you get started in Web3 altogether?
Yeah, it's interesting story actually. So I, I was reading on Wired and other other news providers that for me it was either blockchain or AI. Right, there was going to be a movement between probably both of them, but one of them reached out to me the most. I think blockchain was closest to critical mass at the time. Probably, I think that's probably not so much true with Chat GPT and other things now, but at the time it was 2015. We were clearly moving towards a bull market, and what was really interesting to me was that as a techie, as a creator, all you want to do is build things that everybody loves to use, right? And build things that have this wide audience, and often, people can be onboarded very quickly. That's kind of those are the technical products that you want to build out as a techie, and blockchain and Web3 just enables that. So I got obsessed with Web3. I was spending pretty much every non-working hour reading about Web3 and blockchain and everything else. And let's be honest, it's a multifaceted industry as well. You need to know about game theory. You need to know about economics, tokenomics. There's a lot of things you need to learn to be an expert in this space. And the speed it moves, I'm not sure there are many people that can really call themselves an expert in this space either. So yeah, and then I joined Funfair, and Funfair we were focused on making the online gaming market provably fair for the player. So what you'll often find is some of these betting or gaming companies, they'll host their servers and they'll host their code in countries where the US, the UK, and other first world jurisdictions, they don't have jurisdiction in this place where they store their code. You need to kind of ask yourself. I'm not going to editorialize here, but you need to ask yourself why they would make that decision. So we wanted to make it completely fair. We wanted to make sure that everybody could rerun every roll of the dice on chain and ensure that every part of that was fair and transparent. We raised a $40 million ICO back in 2017. We built the first layer two on Ethereum. It was us and a company called SpankChain, which is I always find that funny. There's an adage that gambling and porn are always the innovators in any new market, right? And that was true with layer twos. So it's pretty funny. But yeah, moved into Funfair, really good, really great company. Learned a lot there, and then as I say, moved to the institutional stablecoin, and then most recently worked with MakerDAO on a company called Monetalis, and that was my first foray into ESG because it was a $500 million die pool for ESG loans.
You're no stranger to raising funds. I mean, you've done it in your previous initiatives, and you've also done it with Thallo during conditions that weren't necessarily ideal. What would you say to some of the other founders, entrepreneurs out there that are trying to raise money right now? What are some tips that you could give them during these times?
So the key is bootstrap, bootstrap and build early on. If you can bootstrap with friends and family, and there's often a lot of friends and family in the space that are, I don't know, let's say maybe you do slightly less due diligence than most VCs will. And that's important in those very, very early days. If you can raise 150, 200K, it gets some developers on board, focused on long-term alignment with token benefits and incentives and things like that, rather than just paying them a flat wage up front. Get the people on board that are going to be with you for the next year and a half, and make sure you get it wrong early. Get it wrong early. Get those feedback loops in as early as possible, because the sooner you can define that narrative and defend it, the sooner you can speak to a VC and say, listen, we've already been down this road, A, B, and C. We know we're now on the critical path D, and this is why it makes sense, because we've got this user feedback, because we've spoken to these suppliers and these buyers, and they've effectively agreed that this is the right critical path for us. So just, I guess, fail early, get those feedback loops in, and don't raise a huge seed.
Good advice. Uh, Recently, the CEO of BlackRock mentioned that tokenization is the future. What are your thoughts on that? Why is it that now is the time for that? And what are some of those advantages that we're going to see play out in the future?
Yeah, so I've previously worked in fintech. We partnered with BlackRock, as I mentioned. the The real truth of TradFi is that it's slow, it's inefficient, and there are large parts of the market that doesn't make sense, or that made sense before and maybe don't make sense now. So, um, settlement windows for equities are at the moment T plus two, T plus three, which means effectively from today you settle and you pay me in 2 or 3 days. The problem is, especially in market conditions like this, banks are effectively rehypothecating those funds. So they're using those funds for a number of different settlements. So there's a bunch of failures that exist in the market. There was one point in 2008 where in the EU there was something to the equivalent of 20% of all transactions in the equities market failed. They just failed. So then you have to go through, risk departments. You have to invest more into risk departments to make sure that you're and clearing and things like that to make sure that you're trying to do as much due diligence on your partners as possible. But you still get these constant failures, and the problem with these constant failures is they reverberate through the market. So if Bank A fails to pay Bank B, Bank B has its own settlements that it's relying on Bank A for. Bank C fails, and so on and so forth. So there was a there is a clear productivity gain to be had from making these markets more efficient. And how can you make these markets more efficient? Well, they've already got these custody. Bank of New York Mellon, for example, biggest custody provider in the world. It has all of the custody financial infrastructure in place. If it can tokenize all of those elements, then it knows at any one point in time whether that settlement's likely to fail, and it can warn you in advance. Or it could be T plus zero settlement. So as soon as you trade something, you need to have the funds there to settle. And when you when you're talking about financial markets, you could be talking about trillions of dollars a day of avoidance of these failures. So I think it's clear to anybody that's worked in financial markets or fintech that that's the way forward. And then you look at things like the carbon markets, um, and the inefficiencies are even worse because it's all OTC. They don't even have these aging systems that aren't quite perfect or aren't quite fit for purpose. You really don't have any of that at all. So in some ways that's good. You can build out greenfield infrastructure, but in some ways it's even worse, right? And I think on the flip side, it's really important for crypto. It's really important for Web3. What we see is this cyclical deleveraging in every bear market, and we see all the incumbents, all the big players fail one after another. And because they're all interconnected, it's the same as what I said about the banks. Incumbent A fails, owes a load of money to incumbent B. Incumbent B fails, incumbent C fails, and they're all trying to sell the collateral that they back their companies with into the market that will then cause their collateral to lose even more value. So it's this cyclical deleveraging that continually happens. But if Web3 providers, stablecoins or whoever, can invest in real world assets, can invest in carbon credits, can invest in whatever else it might be, loans or equities or whatever, and they're tokenized, well, then you have this portfolio diversification that means that you can sell into the real world markets, the real world asset markets, and of course they're I guess slightly more robust than Web3 markets at the moment. So I think it works both ways, and Larry Fink's been calling for it for a little while now, in one way or another.
So personally, I think that in order for us to instill more confidence back into the market from institutions or retail investors, regulation is going to have to come into play in order to have a
Yeah.
little bit more transparency and confidence. Now, how much regulation is up for debate? I'm curious to get your thoughts on just that entire space.
Yeah, it's a great question, right? So we're seeing Mika or Micah. I think maybe Michael was a singer, but anyway, Mika is probably the most near term. The European crypto asset regulation. I think we can all in the space agree that any level of regulation is important. It's important because it will give comfort to institutions, it will give comfort to regulators, and because of that, it will allow more capital to enter the markets. So, I think anybody can agree that if we can get more capital into the markets and if we can get more comfort into the users that exist in those markets, that's a good thing. However, regulation is always a double-edged sword. We see that all the time. I think even KYC and AML standards, there's an extra, maybe it catches something like 2% of financial crime, right? So KYC and AML is a good idea if it is correctly implemented and if it prevents, terrorist funding and so on and so forth. I think it's a double-edged sword. It'll be interesting. This will clearly be the year for it, and I think if it's implemented correctly, it could be the trigger for the next bull run.
Yeah, I agree that this is a big key year for that. And, I
Yeah,
think that especially with FTX, I think the incentive is pretty high to get this right and to do it sooner than later. When you think about Thallo, like what's next? Eh, What could you tell us that's not a secret?
yeah, it's a good question. So, what's next for us? As I said, for any part of the market, it needs to be aggregating the supply. Once we've aggregated the supplier, there's only really, it makes sense for the current buyers in the market to go to wherever that supply is aggregated. But I think we're really, certainly at Thallo, we're about more than that. So we talk about 4 stages. We talk about making it possible, i.e., building out the API and the infrastructure. We talk about making it easy. So how easy is it to onboard the next retail customer? How easy is it to onboard the next institutional customer? Then to make it competitive. So we've currently signed a $50 million or 50 million euro deal with our first revenue partner over 10 years. Their model is to essentially wrap products in to make them green. And we think that that's something that's very scalable throughout the market. So we're now talking to £1 billion e-commerce providers to scale that same model. And as we move forward, we really think that that's a very easy way to scale the market by orders of magnitude. So make it competitive, and then eventually make it mandatory. Right? Make it mandatory either through regulations, through countries' regulations, or just simply through a brand image setup. So if your biggest competitor who's working in the same industry as you sets the standard that that you have to wrap your products and make them green, well then you're going to eventually have to do that as well if every other competitor in the space is doing that. Otherwise you lose market share, right? So and really all of that comes down to infrastructure. Really all of that comes down to aggregating that supplier and then moving forward from that. It's all about scalability and refi, and that's really the only way forward.
Well, where can people follow along on your journey?
Yeah, so you can follow us on Twitter, Thallo.io. You can join us on Telegram, join our mailing list, reach out on LinkedIn. However you want to join us, talk to us, please do. We always love feedback, and ultimately, it's a bit cheesy, but we're all in this together, right? If we're going to make a go of this, we need to make a go of this, and we all need to be bought into it. So, any feedback on today's interview or anything else that we put out, please reach out.
Amazing. Thanks so much, Ryan. I know like I said, you're super busy. You run a company and you also have a baby to report to. So busy times, but really exciting times ahead. I appreciate your opinions on the show, and looking forward to seeing everything else that you build.
Thanks, Mikhail. Let's jump back on soon. Appreciate it.